I'm Ramsey personality and financial expert George Kamel. In this video, you'll learn at least 3 things about life insurance: what types of life insurance are available, the difference between the 2 main types, term and permanent, and why one of them is a terrible idea. We'll show you what type of life insurance will take care of your family best if something happens to you. Life insurance is one of the most vital pieces of your family's financial plan, and it's the part of our plan we want to discuss the least, because life insurance only pays off if you die. And who wants to talk about that? But we need to talk about life insurance because it's essential to your family's security. The purpose of life insurance is simple: to replace your income for your family if you die. But with all the choices available, you can end up confused and frustrated. So we're going to break it down for you so that you can understand your options. Now, there are 2 main types of life insurance: term life insurance and permanent life insurance. Let's start with term. Term life insurance is the simplest and usually the most affordable type of life insurance you can buy. It does one thing and one thing only: pays the people you choose, your spouse, children, or other beneficiaries, a fixed amount of money if you die. With term life, you pay the insurance company to assume the financial risk of your death during the period or term of your policy. Typical terms are 10, 15, 20, or 30 years. So, if you buy a 15-year term life policy with $500,000 in coverage, you'll make a monthly payment for 15 years. If you die during that 15 years, the insurance company will write your family a check for $500,000. Unlike other forms of life insurance like permanent life policies, a term life policy isn't worth anything unless you die during the term. But it's an excellent way for you to proactively take care of your loved ones so they don't have to worry if something happens to you. Term life is the only life insurance policy we recommend here at Ramsey Solutions. You're going to want a term life policy worth 10 to 12 times your annual income. That way, your family has money to replace your income if something happens to you. It's the cheapest way to protect your family. Permanent life insurance is much more expensive and more complicated than term life insurance. Other types of permanent life insurance like universal life, variable universal life, and index universal life work basically like a whole life policy with a few tweaks to some of the features and savings options. And that means they have all the same problems too. They try to provide life insurance and savings, and they do a bad job at both. You had one job. One. Permanent life insurance policies come with tons of fees, so the cash value never ends up growing like you expected it to. And all you're really left with is a too expensive life insurance policy. Our advice? Get yourself a less expensive term life policy and build your own cash value by investing the money you save. Insurance companies also offer dozens of other insurance policies, each designed to pay death benefits differently. This article walks you through the basics of other kinds of life insurance like no medical exam, simplified life, guaranteed life, joint life, survivorship life, final expense life, and accidental life insurance. That way, you'll know what to look out for as you find the right policy for you. Now, there are some insurances that are somewhat good, but not good enough. For instance, organizations or employers can offer group life insurance as a benefit to their members or employees. You can usually opt into these plans at work, but they usually don't offer enough coverage. While it can be a good place to start, especially if it's free, you'll still need to get your own policy to make sure you have enough coverage. Whew. Wow, so many bad options. As I said way back at the beginning of this video, the only type of life insurance we recommend is term life. It's the only way to go if you want to be smart, save money, and provide yourself and those you love with peace of mind. It's usually the lowest cost life insurance you can buy, and it only does the one thing life insurance is supposed to do, which is replace your income when you're gone. We recommend getting a term life insurance policy that covers 10 to 12 times your annual pre-tax income. So, if you make $60,000 a year, you should carry at least $600,000 in coverage. Why this much? Well, because if your surviving spouse invests that $600,000 into a good mutual fund with an average 10 to 12% return, they could take off $60,000 a year from that investment to replace your income without ever cutting into the original investment amount. Life insurance should be simple. That's why we recommend only purchasing a term life insurance policy. It's straightforward, inexpensive, and designed to do one thing over the long term: support your loved ones if you die. No one wants to talk about it, but we have to. You need life insurance. When you're gone, those you love will be grieving. It's unavoidable. But leaving them penniless, however, is avoidable. So make sure they'll be financially secure no matter what. Whether you're in the market for a new life insurance policy or you're just wondering if you're carrying the right kind of life insurance, we recommend our Ramsey trusted provider, Zander Insurance. Their insurance professionals will help you get a term life policy that fits your family's needs. We've got links for you in this article so that you can start getting quotes on term life insurance today.